Welcome everyone to Vested Interest. This is Shane, and this is our weekly portfolio update video. We are going to cover the $2,668 in new capital added, any dividends received, any options we were in. We will cover all that. We do this every week, but before we get too far in the video, I would like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks in growing companies with positive cash flow that covers the dividends, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis, and I cover those investments on a weekly basis every Sunday morning. So you'll get to see what I'm doing out in the open. It's free. I don't charge anything here. I also do larger purchases whenever I get a bonus, or if I was to do a side job or something like that. And as I said, it is free. But if you would like to help me out a little bit, if you could do me a big favor, it doesn't cost you but a couple of seconds of your time, and it really does help out the channel. Hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click the notification bell down below so you're notified whenever I put out any new content. Along with this weekly portfolio update series, I do a stock pick of the day series Monday through Thursday, where we take a look at a company stock that's pulled back on the day, run it through my screener, and see if it makes it onto my watch list. There is also the thanks button down below for those of you who may want to buy me a cup of tea. Really do appreciate all of you out there who have taken the time to do that. And again, special thank you to the viewers and subscribers of the channel. You guys and gals are awesome. The channel continues to grow because of people like you. All right, options. And I'll be honest, I did actually try to run a couple options this week. Nothing hit. I tried some on Pfizer. I think I did some on AT&T, a couple others. Nothing hit. I am really not having very much luck in options. I'm pretty conservative when it comes to options, but typically we have much better luck than we've had recently, at least the last couple of months here in 2025. So I'm really considering, since one, I'm not as focused on it as I have been, and two, I'm just not having the luck I typically do. I'm thinking of dropping this slide and just bypassing options for a while, maybe taking a little bit of a break. We'll see. All right, but dividends have been coming in pretty consistently. On the 18th, we received dividends from a couple different companies there, $226.52 in total. Now we do have the DRIP set on the portfolio, and DRIP stands for Dividend Reinvestment Plan. That just means that anytime a company pays out dividends, the funds from those dividends go right back in and buy more shares of that same company. So in this case, Procter & Gamble, ticker PG, out of the consumer staple sector, paid us $45.89. That $45.89 goes right back in and buys more shares of Procter & Gamble, 0.27962 shares total. And this one, I did add to a little bit here. I'd like this in the mid 160s or lower. It looks like it jumped up into the 170s again. I probably won't be adding to it there, but this is a position I'd like to build out. I think I have like 50 to 60 shares somewhere in there. And I'd love to get this over 100 shares. But like I said, I'm kind of waiting for it in the mid 160s or lower there. That would still be above my cost basis, but in a range I'm comfortable buying. And not to be or actually to outdo Procter & Gamble, Omega Healthcare Investors also paid us dividends, ticker OHI, out of the real estate sector, paid us $200.63, and same thing, we have the drip set, so it went right back in and picked up 5.54537 more shares of OHI. The funds received, new positions added there, new dividends, or I'm sorry, new shares picked up of the two positions, added $15.98 in additional passive income over the next calendar year. So after a pretty good start in dividends, we went in and added some new capital. We added $1,982.29 also on the 18th. With those funds, we added to our Enterprise Product Partners position, ticker EPD, picked up 5 shares there at $33.74. Now this is over my cost basis, and it's just one I'd like to build out a little bit more. You know, maybe nibble 4 or 5 shares here and there, as I feel like it may be not really undervalued, but maybe close to fair value, maybe even slightly a little overvalued, but it's just a position I really want to build out there. So I'm not looking to add a ton, but like I said, wouldn't mind adding 4 or 5 shares here. I'd love to get it down in the low 30s or back below 30, but I'll nibble a little bit here where it's at. Procter & Gamble, as I said, I'd like it in the mid 160s or lower, so we did add 2 shares before that run up there. I think it was at 170 by the end of the week, but we got it early in the week, so 2 shares added to our Procter & Gamble position, ticker PG, again out of the consumer staples sector, and EPD is out of the energy sector if I didn't mention that. Added 5 more shares to our Next Era Energy position, ticker NEE. This is a utility company. Picked up those 5 shares at $68.05. Another position I'd like to build out a little bit more. I'd love it under 70. I think this is another one that kind of ran up towards the end of the week, over 70. So we might back off a little bit, not add anything here anymore. We might nibble a little bit as well, but under 70 is where I'd like to pick this one up. Again, I think it's above 70 there. There was a pretty good run up at the end of the week there for a lot of positions, at least in my portfolio. We added 6 more shares to our Comcast Corporation position, ticker CMCSA. Picked up those 6 shares at $35.42. This one is below my cost basis. This was one I was looking to add to consistently in the month of February, and we've done that almost every week here. So I'm going to continue to do that for the last week here and maybe look to do the same going into March, but we'll see what stocks making on my stocks to buy for March list. And 5 more shares to our Cisco Corp position, ticker SYY. This is out of the consumer staples sector as well. Picked up those 5 shares at $71.03. Another one that was on my stocks to buy for February list. And Occidental. This was also on my stocks to buy list for February, ticker OXY, out of the energy sector. 12 more shares at $48.13. Excuse me. Another one, I think this one popped a little bit as well, just slightly over $50 per share. I'd like to continue to buy this one. I'd like to get over 200 shares. I'm pretty close. I think 182 shares maybe right now. So I'd like to get over 200 shares, but I'd also like to keep my purchases around the mid 50s, so 55 or lower, 53 or lower, somewhere in there. While it's right around my cost basis. My cost basis is under $50 per share, so I'd love it back here in the 48, 47, 46 range. But like I said, it has popped a little bit over 50, just slightly, I believe 50 and some change. So I'm going to continue to buy till I get over 200 shares and try to keep that cost basis under $50 per share. Now, passive income added from the $1,982.29 and the new shares it picked up, $59.52. And we weren't done. We went back into the portfolio on February 20th there. That was Thursday. Added $686.08 in additional capital. With those funds, we picked up a couple of ETFs, which are part of our weekly buys. Vanguard's Total Stock Market ETF, 1 share, ticker VTI at $300.58. I think this one actually pulled back. Should have waited till Friday. It was about $5 cheaper, around $295 there instead of the $300. But I buy this every week, and whenever I decide to buy it throughout the week, it's just 1 share. If it was to pull back significantly, I might bump that up to 2 or 3 shares a week. And Schwab Strategic Dividend Growth ETF, ticker SCHD, is another one I buy weekly, at least 3 shares here. I picked up 5 of ticker SCHD at $28.13 per share. And last but certainly not least, we added a little bit more to our Vici position. Vici Properties, ticker VICI. This is a real estate investment trust here. Picked up 8 more shares at $30.61. I'd love this back under 30. I think this is another one that jumped up a little bit over 31 here, I believe, by the end of the week. So I'll probably won't buy until it's back in the 30s or lower. But the $686.08 added. The new shares picked up with those funds added an additional $22.53 in passive income. Total invested for the week, $2,668.37, which is above my normal investments for the week. I usually put in about $1,300 to $1,500 per week, but we had a little bit of extra cash sitting on the side. Thought I'd dump it in there, especially with positions like Next Era Energy. I wanted to add a little bit to Enterprise Product Partners, a couple other ones that weren't on my typical buy list that were just showing some value that I thought I could add to. Procter & Gamble, another one in the mid 160s there. Again, I'd love that back in the mid 160s, so I could build that out a little bit as well. Passive income added from the dividends received as well as the new capital added $98.03 in total passive income over the next calendar year. Very nice week. Now, again, we did add a little bit more than we normally do, but I like to see a nice big chunk of passive income added over the next calendar year in a single week. All right, let's run through the sector weights here real quick. Communications makes up 10.72% of the pie here. Consumer discretionary at 2.03. Consumer staples makes up 7.87% of the pie. Energy sits at 8.50. Financials makes up 2.65. Healthcare makes up the second largest chunk at 13.52%. And part of that is the big run up in CVS here over the last couple of weeks. I was down significantly on that position, around almost 20% at one point. It's I think a little bit below my cost basis now, but pretty close to break even. Last week I was actually up a little bit, and then Johnson & Johnson has rebounded as well. Industrials makes up 6.92%. Technology is the largest piece of the pie here at 14.63. I will say Google is starting to drop again. If it gets back down into the 160s or lower, I will probably add to that position there as well. Lam Research has run up into the mid 80s. I'd love that back under $80 per share. I'd add to that one also. But right now I'm going to hold in the mid 80s and above. I'm not going to be adding to that one. But like I said, if Google gets back down to the 160s, that will be one I'm looking to add. HPQ and Cisco have both kind of run up. I am not adding anything to either one of those. Industrials makes up 9.24% of the pie. Materials sits at, or I'm sorry, yeah, technology 14.63%, materials at 9.24%, utilities at 8.34% of the pie. REITs and real estate here at 5.42%. Vici, again, if it drops back under 30 per share or the mid 30s and lower, I would really build that one out. But with the sale of Realty Income there last week, this one has really taken a hit as far as the overall portfolio allocation. And ETFs, eventually this will overtake all the positions in the portfolio just by the nature of adding to it every single week, regardless of the market. And it currently makes up 10.16% of the pie also. Over here to the right, you can see those same percentages that match the pie here, as well as the dollar amount allocated to each sector as well. And here it is. I show this every week. I think it's important for those of you out there who are viewing financial channels like mine. No, I am not a financial guru. No, I am not a financial advisor. I am just an average person like you. I go to work every day. I'm married. I have 2 kids. Maybe you're not married and have 2 kids, but I'm sure most of you out there go to work every day. I do not have a degree in finance. I do have a bachelor's degree in occupational safety and health, but it is not in finance. My background is not in finance. My parents don't have a background in finance. As a matter of fact, neither one of my parents even graduated high school. I was the first one in my family to graduate high school. So if I can do it, if I can manage my own money, figure this stuff out, learn along the way, so can you. You do not have to pay someone to manage your money. You don't have to be afraid of the stock market. It is not some, especially with all the tools now, it is not some scary, strange place that you cannot figure out or that you cannot handle. I think that almost anyone that understands basic math and the ability to learn along the way can definitely invest on their own into the stock market. And like I said, with the tools that they have now, you're able to download apps. Most banks have the ability to set up an account for you as well. I use Ally Financial, where I use my regular banking as well as my investment account, my taxable investment account as well. I do have a 401k. Maybe eventually one day I'll cover all of my different investments because I do have a 401k, and then I have a little bit of a play account on Webull that I put, like $75 every other week or every couple of weeks that I kind of dabble in some non-dividend paying stocks. So maybe I'll cover my entire portfolio at some point, including my 401k and that other little fund that I have to the side on Webull. But for this channel, I really focused on the dividend growth investing side, and I think it's important for you to see this on a weekly basis. If someone's talking about investing. No, I get it. We're not financial advisors, but you should at least be showing people what you are doing so they can understand whether or not it's working. Kind of gives them an idea of how to invest, what you're invested in, why you might be invested in it, the ups and downs associated with the market, right? We see some red in the portfolio overall. That's okay. A lot of green in the portfolio. That's really good. That's how it should be. The market goes up and down. Individual positions in the portfolio go up and down for a number of reasons, right? Bad news, bad earnings reports, a war breaks out, especially stuff in the energy sector could be impacted by weather. If we have a big weather event, the Gulf of Mexico, and I'm going to continue to call it the Gulf of Mexico. I don't care what the new administration wants to name it. I think that's all a distraction. So if there's a storm on the Gulf of Mexico, or somewhere else that might impact drilling, a lot of times the energy sector, especially oil and gas prices, will get hit, and some stocks will take a hit because of that. And that's just a storm, right? So there's a number of reasons stocks go up and down throughout the year and throughout the month, throughout the week. They all have a 52-week high, they all have a 52-week low, and a stock can touch its 52-week high or its 52-week low at any time for a number of reasons, multiple times throughout the year, even set a new 52-week low or a new 52-week high. So again, I think it's important to see a real portfolio built out over time so that you can see what I'm doing. I'm not just talking about investing, I am actually doing it, and you can do it too. All right, so here's the tickers, all the different positions in the portfolio in this column. Total shares, and all these numbers will be as of the close of business on Friday. Total shares here, current price of each, market value, average cost per share. That's my average cost per share. That does include reinvested dividends. Purchase price, this also does include reinvested dividends. Total return, whether I'm up or down, I'm going to show it. I'm going to be as transparent as possible with my portfolio, not only showing you what I'm buying, but showing you whether I'm up or down. Showing you when I sell a stock or whenever I add a stock to the portfolio. Yesterday, I kind of ran through a little deeper dive on how I'm looking at a stock's financials, their income statement, their balance sheet, that sort of thing. So if you haven't seen that, check that out. Also, I'll give you an idea of how I really look at a company's financials. Percent return, whether I'm up or down here, I think it's important for you to see. Sector that each company falls in, whether they're a quarterly, monthly, semi-annual payer, you'll see that here. We do have a couple positions in the portfolio that just raised their dividends. So if you see the yellow, that's what that means. I am highlighting the positions as they raise their dividends for the year. So I want to say it was NextEra Energy just raised their dividend, and Occidental Petroleum just raised their dividend. So it was about a 10% raise for NextEra Energy, and it was about a 9% raise for Occidental. So those are the two most recent raises. So that adds to our final total, as well as the new invested capital and the dividends we received. Current dividend yield in this column here, yield on cost, portfolio weighting. So what we saw on the previous slide was each individual's weighting. In this column here, we're going to see, or I'm sorry, on the previous slide, we saw each sector's weighting. In this column here, we're going to see each individual position's weighting. And I do have a rule. I don't want any one position. So Ally Bank, for example, I don't want it to be more than 10% of the portfolio, and I don't want any one sector to be more than 25% of the portfolio. That will not apply to ETFs, because eventually ETFs will just become the largest position regardless. Estimated annual income here, that's the real fun column. Payout months here, dividend growth year over year. This changes as they change their dividend growth, right? Occidental actually was at 22%. Their most recent raise was at 9.2%. So that's what I put in here, 9.2, same thing. NextEra Energy, they raised up theirs at 10.12%. So that's the new number. So these will adjust as they adjust their dividends. And where it sits at 15% of a 52-week low. I use this as a high water mark. I do not want my average cost per share to be above 15% of a 52-week low. That's where I like to keep it. So let's look at Procter & Gamble, for example. I added 2 shares, right? It did jump up back into the 170s. I thought it did. $170.24. 15% of its 52-week low is $163.87. So I bought it above 15% of a 52-week low, but it didn't bring my average cost per share above that, right? I could even buy it at 170. And so long as I didn't buy a big tranche, it probably would not bring my average cost per share above 163. So I could probably add even at 170, but I'm going to wait. I want this in the 160s, mid 160s or lower to add to. It will bring up my cost basis, but I'm trying to keep my cost basis under 163.87. So I have a little bit of room there to go. Hopefully that makes sense to you. So total shares currently 6,910.683 shares. Market value of the portfolio, $343,994.80. I think by the end of the year, we may pass $400,000 in total portfolio market value. We'll see. It really depends on the percent return for the year and how much I add. But I think I'm on track to add about 70,000 to the portfolio here. So it's going to be pretty close with the. If we have a good year, I think we'll bust over 400,000 in market value. My purchase price, what I have in the portfolio, this does include reinvested dividends, so it's not just dollars out of my pocket, though technically if I turned off the drip, those dividends would go back into my pocket, but this does include reinvested dividends is the point. $312,896.89. Total return $31,097.91. I am up 9.94%, which is nice to see. But again, I do not focus on this. This fluctuates. If you've been watching the channel any length of time, you've seen me down 8, 9, 10%. You've seen me up, 9.94%, obviously, if you're watching today. So it's nice to see me in the green, but it is not what I focus on. It doesn't really matter to me because unless I sell out of all these positions, I don't get the $31,097.91. The only way I lock in this gain is to sell out of all the positions. The only way I lock in these losses in red is to sell out of those positions. So total return, yes, it's nice to see, but it is not my focus. I know some people are focused on that. There's nothing wrong with that. Unless you're going to shift around later in your portfolio into other shares, I don't really focus on this. I'm not saying you shouldn't, but it's not my focus. Current yield 3.741%. Yield on cost 4.112%. This one actually jumped up because of the increases. Occidental and NextEra Energy increased their dividends. This was below 4.1% last week. So I'd love to get it back in the 4.2% range. We'll have to see how the rest of these raises go over the next 10 months here. And I'm hoping that some of these, like Ally, who paused their dividend raise, starts raising them. Google, we haven't seen a raise from them yet. I'd like to see a double-digit raise from them since their dividend yield is so low and their payout ratio is so low as well. Same thing with AT&T. I bought them knowing they had just suspended the dividend. So I wasn't expecting raises right away, but it's been a couple years now, so I'd like to see that. And look at that gain right there. I know a lot of people jumped out of AT&T whenever they cut the dividend. I jumped in and bought them, and now I'm up 55.52% with a very high dividend yield, 6.48%. That is the nature of buying stocks whenever they are really pulled back and their prices are suppressed. Your dividend yield is naturally going to be much higher than if you were to buy them as they turn around, right? Buying them back in the $17 range versus right now at $26.64. And I haven't been adding to AT&T, but you see the difference in their dividend yield, 6.48% when I was buying them back here, only 4% currently. CVS is very similar. Yep, I am slightly down again. But this one I was down 19, 20% at one point in time, locked in a 4.1% gain. It jumped up to 5%. If you were buying them back whenever they were, a 5% yield, good for you. That's where you really want to get companies. Good companies, when they really pull back, that's when their yield jumps up the most. That's what I'm looking for. That's when I want to be buying them. A couple other ones, OHI here, I'm up 22.86% and locked in a 9.2% dividend yield, right? Was buying this one several years ago very cheap, or what I considered cheap at the time. And maybe a lot of people were avoiding it because it has a high dividend yield. Now it's not growing its dividend yield, or dividend growth is non-existent. Maybe it starts that in the future. Hopefully it does. But I'm comfortable with a 9.225 yield on cost locked in, right? That's a high yielding bond to me with some growth, right? Of 22.86% and a 9.2% yield. I'm good with that. And this is what I am focused on. That's why it's circled in red over here. The estimated annual income from all the dividends and all the different positions. And this continues to grow week over week, month over month, year over year, as I add new capital, as the positions in the portfolio pay dividends and those dividends get reinvested and buy more shares. And as we saw this week, NextEra Energy and Occidental raising their dividend. That's another way the dividend growth accumulates, that snowball grows. That is the growth in the portfolio, and currently sits at $12,867.46. I don't think we'll bust over 13,000 by the end of February, but we will definitely do so at some point in March. Maybe the first or second week there in March, we'll be over 13,000 a year in estimated annual income, and I'd love to get to 16 to 17,000 by the end of the year. Obviously, I'd love to get to more than that, but I think that's a realistic goal based on where we're at currently in February, $12,867.46. Very nice to see this back on the upswing. And dividend growth year over year, 6.74%. This does adjust as the dividend growth adjusts from year to year, as the positions adjust their dividend growth. Occidental being at 22% there and then dropping to around 10%, for example, 9.2%, did drop this a little bit. But I'd like to see what the rest of these raises look like. Like I said, if Google hits a double digit raise there, that'll jump it back up to 7% dividend growth. This will just adjust as the companies adjust their dividend payouts. All right, that is really it for this one. What's going on in your portfolio? How are you doing? Have you seen a big bounce back in your portfolio over the last week? I know I did. I think we saw a little bit of some red there Friday. Like I said, VTI overall had pulled back, but my overall portfolio this week really did have a pretty good week, along with the dividends paid out. A lot of positions really ran back up. Like I said, NextEra Energy back up into the 70s. Occidental busted over 50 again. So several positions really jumped back up. Procter & Gamble, like I said, back over 170, was in the mid 160s. So a lot of my positions really ran up. SYY is 73 there. I'm going to have to watch that one because I really want that one under like 75 or lower to be adding some more, but I would like to nibble on that one and continue to build that out. This was on my stocks to buy for February list, so I'd love at least another 4 to 8 shares there. But I don't want to be overpaying for it either, and I don't think I really want to pay much more than 74, 75 per share. So I'd like this to pull back a little bit so I can add a little bit more. But a lot of positions in my portfolio bounced back. That's what I was getting at there. How is your portfolio doing? What are your best performers here? For me right now, that is AT&T, believe it or not, at 55.52%. Owens Corning at 46.42%. Return. Kroger, man, I wish this one, I was hoping this one would pull back so I could add to it, but it continues to run up here in the mid 60s now. Return of 44%. 44% return for Ally. You know, that's part of the reason I keep holding on to them. Really had good luck with this one, even though their dividend growth has been paused. Really hoping they turn that one back on and start growing that again. Let me know how your portfolio is doing. What's the best returners? What are the worst returners here? We'll go over some of those also. Haverty Furniture Companies, 16.5% down there. Pfizer down 13.46%. Valet, I've been adding a little bit to this one. Didn't add any this week, but that's another one that I want to add to while it's down. And Comcast I've been adding to while it's down as well. CVS, being one of the larger positions, I haven't really added to it. If it was a drop back, 10, 15% again, I probably would add some more, just because I think this is a good long-term company with nice dividend growth, 9.94%, very nice yield, 4% currently, and its growth recently has been around 8 to 10%. So really like that one with a pretty low dividend payout as well. Well, I don't want to make this too long, so as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think. How's your portfolio doing? What did you buy this week? What are you looking to buy the week coming up here? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, for example, drop it in the comment section down below. I'll work into the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. You can see we've gotten a lot of snow lately. This is all the dogs running around in the backyard here in the snow. I do go out in the back here, even though it's all covered up. My daughters and I go out there and do some ice fishing from time to time. But this is what it looks like out back right now. Not quite the nice pool scene that you see in the summers, but that's the nature of living in Michigan. We do get off for season here, which I really do like. Hope you have a great weekend. Thanks for stopping by. Thanks for tuning in, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.